guys, welcome back to another video. Thanks for stopping by. So if you're gonna buy a home, your first time home buyer, you'll definitely need to know about this. And this is you're gonna have to know what a mortgage payment is. So right now, wherever you're living, you're either living rent-free, you're living with a roommate, maybe living on your own, living in an apartment, and you're either paying a landlord or you're paying your apartment complex. Well, when you buy a home, that rent is going to be now paid to the bank. And that monthly payment you're going to make to the bank is going to be called a mortgage payment. So the next logical question is, well, what makes up the mortgage payment? What's it composed of? It's mainly two things. You've got an interest part that you're going to have to pay of the mortgage payment, and you've got a principal part. Now, the principal part is what knocks down your loan. So for example, let's say you buy a place for $300,000 and over time you've knocked it down to $280,000. Well, that's the principal that you've knocked down. And the interest part is how the bank makes money. So your monthly mortgage payment, when you write that payment, some of it's going to go to the principal, most of it's going to go to the interest. And again, the interest is how the bank makes money for them loaning you the money. All right, so let's look at an example to maybe understand this a little bit better. I'm about to get my board to show you this, so hold on for a minute. So let's say you buy a house for $300,000, and that's about average house nowadays. Now you can get them cheaper and you can get them more expensive, but let's say $300,000. Now of the $300,000, we've already talked about you're going to get an FHA loan just because you want to get in the house quick and go ahead and buy it. If you get an FHA loan, you're going to have to put down 3.65%. That's going to be a payment of about $10,500. Now that's going to be your down payment you got to come up with to live in that $300,000 house. So when you move into it, well, when you buy it, the bank will say, okay, you give me some money, then I'll give you the rest of the loan to buy that house. So you're going to give them the down payment, which is $10,500. They're going to say, okay, now we're going to give you the rest of that, which is $289,500. That's what you now owe the bank. So they've given you this money to borrow. Now you're going to start making payments on that. And the payments you start to make on that, that's what your mortgage payment is. So let's look at this example and see what your mortgage payment would be on these numbers. So here's your $289,000, so let's just call that $290,000. So assuming a 6.5%, that's current rates right now, it's 2025, that's what they are. So your payment that you would owe the bank every month would be $1,826. Now, because you're only putting 3.5% down, we talked about this in another video, if you want to go check that out, it's on PMI Insurance, what that means. But because you don't have 20% down, you're going to have to pay PMI Insurance. So your payment, instead of $1,826, is going to go up another $120. And now your payment's going to be $1,947. So the $1,947 is what you're going to pay the bank every month. That's going to be your mortgage payment. So now let's look and see of that $1,947, what's the breakdown of that? Well, here it is. So 120 is going to go to PMI, which we talked about. 450 is going to go to the principal. So you're only going to knock that loan down by $450 per month. The majority of it is going to go towards interest. So 1,377 of your payment is going to be towards interest. So in a year's time, you'll probably knock that principal down about $5,000 a year. So in 5 years, you probably knock it down $25,000. Now, after the 5th year, more starts going towards principal than interest, and so you'll knock that number down quicker. And you can always make an extra payment towards the principal if you want to do that, and I recommend doing that to get that number down quicker. So that's basically what a mortgage payment is. Now, you're going to have more expenses on your home than this per month. I'll talk about that in the next video, and you can decide if you want to put those expenses on your mortgage payment or not. So hopefully this video has helped you understand what a mortgage payment is and the components and the parts of the mortgage payment, where they go to every month. So if you stayed to the end of this video, thank you for that. And as always, If you got any questions about this video or anything, please put them in the comments below, and I'll try my best to answer them quickly. So guys, thank you for watching this video, and I hope you tune into the next video as well. Bye.